So all the playbooks that worked earlier, all the marketing channels suck right now. Because the cost of building software is going down, everybody's going to build one. And all they want is like 3 or 4 customers to make it profitable because cost is so low. The go-to-market, distribution, narrative, what you're building, those things matter a lot more than building. The velocity and momentum itself is going to be the moat. It's not velocity of development as much as velocity to which you react to market forces. Cost of building product is going to go down increasingly to zero. CAC is going to go increasingly to like infinity. It'll just keep on rising. I foresee that a lot of venture funds will fold up in the next 5 years. Customers are not just for revenue. Most founders make the mistake thinking customers paid revenue, their role is done. Customers should help you co-create the business. The future of go-to-market, I think, is where buyers start the process and sellers help the buyer buy better. There's so much of noise and the noise is increasing that we are reaching a stage where almost being different is more important than being better.
Hey everyone, this is Prashant and I'll be host for the VC 10X podcast. And today we have Santosh Sharan with us. Santosh is the founder of Zeer AI and a go-to-market veteran with over 20 years of experience. Santosh believes we are at an inflection point where traditional SaaS model is fundamentally broken. In our conversation today, we explore why the old playbooks don't work anymore, how AI is reshaping startup economics, and Santosh's vision for agent-to-agent interactions replacing traditional sales processes. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help venture capitalists, asset managers, allocators, and family offices in starting their own podcast and building a strong brand. Podcast 10X is designed in a way to work well with the busy schedule of investors, where we handle every aspect of podcast production so you can focus on investing. If you're looking to build a strong investor brand, starting a podcast should be right up your priority list. It's the only form of marketing where you can showcase your strong network, in other words, access to limited partners and founders, and grow that network further. And contrary to what most people hear, it's still very early to start a podcast. There are at least 10x more newsletters and 1000x more blogs than there are podcasts in this world. You can learn more about our podcasting services at podcast10x.com. I'll make sure to add the link in the description below. Enjoy this episode. Hey, Santosh, so good to have you on the VC 10X podcast. How are you doing?
Very good. Thrilled to be here.
Yeah, it's a pleasure having you on. To start things off, can we have a bit of your background, your story, and what you're working on right now?
Sure. So, for the last 15, 20 years, I've worked with various go-to-market and data companies. And during this process, I feel like we, as in go-to-market teams, got a bit greedy with data and automation. And what worked earlier no longer works. So all the playbooks that worked earlier, all the marketing channels suck right now. Emails are not getting delivered. Nobody responds to phone and so on. So this is where last quarter I was thinking about what's next. And I decided to flip the funnel and do a buyer-led go-to-market platform with Zeer AI. So that's what we are doing. With AI and agents, I think there's an opportunity to create a buyer-led go-to-market. So contrast that with what we have today, which is seller-led, where sellers are sending, say, 10,000 emails and only 10 buyers are in market to buy. So other 9,000 and change looks like a spam, right? Buyer-led go-to-market is where buyers raise their hand and they start solving a problem where sellers participate and help the buyer. Now, it turns out Gartner has been talking about buyer-led for over 10 years, but turns out nobody really built any solutions for the buyer. So there's no CRM for buyers. There's no tools for buyer to run their buyer journey. So we are building some of those tools for a buyer-led agentic go-to-market platform.
Yeah, that's quite interesting. And you're someone who has been in the space, worked on GTM strategies at different companies. You have some sort of experience in running all these things, especially GTM and such. So we'll talk along some of those topics as well, which are adjacent to what you're building as well, right? So the first one on that front being, you've said building AI startups is completely different from building a SaaS startup, right? What's the most dangerous assumption you say that founders have about building a AI startup versus building a SaaS startup?
Yeah, yeah. So um, I didn't know before I started dipping my feet. Uh, in SaaS, if you think about it, there's a lot of front-loaded work, and then from there onwards, it's like linear or progressive input in order to get success. AI doesn't follow the same rules because with the AI startup, there are some very core AI which takes a while to develop and fundamental AI technology, but that's not what I'm talking about. Most of the AI apps, like ours, right? Um, Oftentimes, some part of it is a wrapper over GPTs. Um, so you get an initial euphoria because in a matter of weeks you get to 50% of the app, right? And then the real work starts because then it takes another 3 4 months to finish, to tweak, to build all the apps. So that's something founders need to plan for. But also, I think the real value is not in creating those wrappers, right? The real value, like in our case, we are putting together a network around it, uh, almost like a social network or network of buyers and sellers that we're trying to solve a real problem, um, not just provide ChatGPT info, right? So those things take a while. One last point. Um, I think building a narrative or the go-to market for these AI startups is also not as simple as SaaS. There's a lot more focus on value and outcomes than they used to be earlier with like subscription type services.
Absolutely, that's quite interesting, and that's quite a shift that's happening, especially in the B2B space. So that's an important distinction you made, that okay, the first 50-60% of the product founders can make maybe in a few weeks, right, with the tools that are available now. But the other 50% or 40% that's remaining, that's where the real work lies.
Right.
uh, and still you said that tech or AI itself cannot be your moat or differentiator. It has to be some sort of network or something
Right.
that's different about you, and that's defensible about your business, right?
Totally.
So that's quite interesting. And how did you take that journey of building the initial 60% of the product at Zeer AI early on? Were the same tools that are available today were accessible to you, or not? Or how do you see people playing that out right now, founders doing that, building the initial product early on and then tweaking it and refining it for the use case?
Yeah, yeah. Um, our journey was a little bit different, but I'll talk in general. The journey that most founders go through. I think there is some advantage of being able to put something together very quickly, which is what I'm seeing the good side of AI development or vibe coding, if I can put a name to it. Um, the good thing is you have something now you can take it to market and get feedback, right? So some of which we did as well. Although we are building a compound startup, not an end point solution. So we're building like 7 different apps and we're building a whole platform. So ours was a slightly different case. But let's say you're building an AI app, and you can do 50% of the app in like matter of weeks, then I would recommend going to market, right? And getting some feedback. And that helps with the product market fit, which earlier you couldn't because it cost so much, or the front loaded effort was so much that this traditional development cycle of getting really knowing what you're building and being very sure and interviewing users and putting together requirements and then going building it and then taking it to the market after like several months, that whole cycle has been disrupted. Now, within 2 weeks of starting the company, you should have a potential customer using something. And as you are getting feedback, you are building it. So your product and engineering cycles have gotten compressed. And now you're doing 1 week turnarounds rather than 3 months turnaround. And that really helps uh, companies attain product market fit much sooner than they would for SaaS.
Absolutely. Yeah, that's quite interesting. And another point you mentioned is that you cannot just be a wrapper to ChatGPT or other LLMs. It needs to be something more. And I think one good example for that would be or a common example that mostly people would know is perplexity, right? A lot of
Yep,
people say that it's just a wrapper, but there are two more things to it which meet the eye when you go deeper into, which is that they are aggregating different LLMs in a single platform, and the other thing is that they have built specialized features, and the UI, I would argue, is better than other platforms. So they are actually still building for the user and giving them what they need while working with these different LLMs all on one platform. So that's the differentiator there, and that should apply. How does that apply to your own startup? That is something that founders need to think about, right?
absolutely. Absolutely. Well said.
Awesome. Great. So, again, something that you've said is that founders these days need to be ready to pivot in just a matter of weeks, right? Because changes and these new launches are happening every now and then. Almost every day, there is some new AI launches happening, right? And some launches can make what you're building obsolete, or maybe you can do something better than what you were already doing. So, give me an insight into that. How founders should gear up to, be ready to change at the speed of change that is happening in the industry right now.
Right, right. So there are multiple fundamental shifts that's happening right now, right? So it's important to understand that and the implications it has on venture building, right? So one of the fundamental shift is that price of building tools is going to zero, right? So earlier all the focus was on building, right? Now you think about what you want to build and then the building part is easy, right? So the go to market, distribution, narrative, what you're building, those things matter a lot more than building because the nature, so the world we are going into is, let's pick a category, say customer success software. So 10 years ago, say if they were 40, today, say they're 80. Next 12 to 18 months, there's going to be 800, right? So there's going to be a quantum jump in every single AI or SaaS category. um, because the cost of building software is going down, everybody's going to build one, right? And they all they want is like 3 or 4 customers to make it profitable because cost is so low, right? So now, um, this leads to your question about um, eventually, um, the way you think. Let's say you're building something, a customer success tool, and you have a unique angle, and then you hear that somebody just launched something similar because the pace at which these tools are coming at us is furious, right? So the ability to pivot and come up with new ideas and how quickly you can kind of build upon some of your earlier builds is going to be the key. The velocity and momentum itself is going to be the moat, right? And to double click on that, it's not velocity of development as much as velocity to which you react to market forces, right? Because development is going to be, um, like we are saying, lower cost and efficient and high velocity anyway. But then a lot of companies don't react to market very quickly. They don't, like competitive forces or market forces, right? The companies that are able to react like overnight almost, or like in a matter of days rather than months, they're the ones that are going to win.
Yeah, absolutely. That's quite interesting. And the point you mentioned about that there's going to be far more competition in the space, right? Because making these tools or SaaS businesses is going to be so much easier that more people are going to be doing it, right? Who would otherwise not build something like that. But now, since it's so easy, they can build it and put it out there in the market, right? So how does that
Right.
impact the margins for these businesses and the valuations these are
Yeah.
driving? How do you look at that?
That
Let's say from an investor perspective, how should they look at this market now?
yeah, the venture investment has completely changed or will completely change, right? So there are a couple of numbers. So um, cost of building product is going to go down increasingly to zero, right? CAC is going to go increasingly to like infinity. It'll just keep on rising, like higher and higher, to the point where my prediction is that it won't make any sense for endpoint solutions to afford a CAC. Because if you're going to spend $500,000 to buy a customer, then why are you going to sell your subscription for $200? Right? You'll run it. So everybody's going to try and become a platform or join a platform so they could subsidize the CAC. Right? Now back to venture investment. If you think about venture investment in the last 20 years, they banned on winner take all models. They hoped that two companies out of the 20 or 10 they invest in just have a like a crazy high returns, and then they pay for all the losses, right? And the reason they would have high return is because the way the venture ecosystem worked is a few companies ended up becoming premium vendors, and they could drive high margins, right, at the cost of everyone else. So look at every category, like say CRM. There's Salesforce, HubSpot, and then there are 400 other CRM that fight for 15% of the market share, right? And that's the case with every market segment. There are like two or three companies that own 80% of the market share, and then 100 plus to fight for 15%, right? So that model is broken now, because when you have um, so many competitors, and then there's going to be feature parity, right? Is going to begin to look the same. In a world like that, there'll be immense downward pricing pressure. So these premium vendors are going to see they'll have to. So the margins will drop in general, because if you have like say 2x, 3x number of vendors, the TAM is not growing 2x, 3x in the same time. So then everybody has to make room for these new vendors. And by definition, these new vendors are going to be lower cost. So the highest pricing vendors are going to have the downward, and then outcome based pricing is making its way from SaaS pricing. So that will cause another downward pricing pressure. So generally, these new pricing models are first incorporated by new entrants rather than existing companies. So I foresee every SaaS company is now an agents company, and new vendors in these SaaS companies are going to be agents that have outcome-based pricing. So you only pay when you have positive outcome. Otherwise, it's free or usage-based cost. Like you only pay for tokens or something. Um, and the biggest target for them would be the winner-take-all models, which means VC model is like at a lot of stress. And I foresee that a lot of venture funds will fold up in the next 5 years. And we will probably see outcomes. We'll begin to see outcomes where um, there'll be super, super efficient companies. Like, look at Cursor, lovable type companies, right? With like 50 people, they're doing hundreds of million revenue, which wasn't possible before, right? So we will only get more and more efficient. So VCs are not going to shut down. It's just that they were hoping for, say, two or three unicorns to pay for all the 20 mistakes they make, right? But now they will get one decacorns, like extremely profitable companies, to pay for all the 20 mistakes. So they'll look for the one cursors and the uh, lovables. So they'll still be, it's just there's going to be more polarity. There's going to be more failures, and the successes are going to be bigger and far fewer.
Absolutely. That's a very interesting take. And as a founder yourself, have you decided to take on venture funding? If yes, how are you thinking about how much should I raise? At what valuation should I raise in order to not put additional pressure on myself? You know that becomes a more difficult situation for me to operate in, or making promises that are hard to fulfill in this industry right now with the rapidly changing environment. So how are you thinking about it as a founder of Zeer AI?
Yeah. We haven't taken uh, venture funding. We do intend to maybe accept. There has been some interest and inbound inquiries. So in the next few months, we might close a round. Um, I Those days are gone when you needed large rounds to scale a company. Now you can do it with less, and that just leaves uh, it's just a healthier way of growing companies and more efficient way. So I don't see, um, at least in the beginning, needing a lot of capital. But again, having said that, in the long run, who knows? The companies have their own life cycle, and it'd be silly to not pour fuel when things are growing. So I've learned in life never to say no to anything. But having said that, I don't think you need hundreds of millions of dollars to get to like $1 billion valuation like you used to before. I do like the efficient way of growing companies. But a lot of these efficient companies, including Cursor and Lovable, if you look at them, they're all raising hundreds of million, even though they have like a small team, right? So the money, it's not that um, the money is going into go to market and not product, right? Go to market is getting more and more expensive at the same rate that product is getting cheaper. And this is also my uh, I guess uh, interest and skill. um, I do think companies that can master go to market, um, or find ways to lower CAC, are going to have the real moat.
Absolutely. Yeah, that's a very profound insight there. That product is going to get cheaper and GDM is going to get more and more expensive with the rising competition. Quite interesting. And you mentioned about the platform versus point solutions thing, right? How every startup would need to have some sort of a platform in order to sustain the business that they're doing or grow it further, right? Can you dive deeper into that with some examples on what are point solutions and what are
Sure,
platform solutions and why they will win?
sure. So let's say you're selling into a sales team, and let's say you have a point solution, say an outreach AI solution where you can send emails uh, through AI agent. It personalizes the email based on the recipient's profile, right? And let's say you sell that solution for, I don't know, $99 or $299 a month, right? Now, it all worked fine when you were using your own solution to do customer acquisition. But now it's becoming more and more difficult. Your cost of customer acquisition keeps rising. So there was this research by Winning by Design in Europe, um, that I ran into last month. They looked at top 50 SaaS companies, and they found that the customer acquisition costs for public SaaS companies have gone up by 60% in last 3 years, and it's going to keep going up, right? So now, if CAC is very high, let's say it's $1,000, it's costing to you to get one customer. Now $99 doesn't pay for it, right? If it is like $5, $10, even $50, you could pay for, like it is still good business, right? But if it gets into hundreds or thousands of dollars, then it's not a good business anymore, right? So then, so this is an endpoint solution. So now what this company could do is one of two things, right? Either it can say, look, I can add, because cost of building tool is cheap. So what I'll do is I already have 100 customers, right? So instead of charging $99, can I charge $1,000 from these customers? Then I can pay for the CAC, right? And how do I charge $1,000? I talk to the customer and find out what are the other tools they're using, and can I build those tools, because they like me, and cost of building is anyway going down to zero. So they send emails now. um, Maybe they need data, maybe they do need to do enrichment or less, and they're working with a data company, right? Can I build that uh, myself and charge another $99, right? Can I uh, maybe after sending an email they want to do a dialer or a call, can I integrate a dialer and charge them another $99, right? So you'll see more and that starts becoming a platform, going from a single point solution. So that is one way to go. But some founder could say, look, I cannot build all these tools myself. There are already those tools exist. So why don't we just partner? Because they have to acquire customer and it's costing them $1,000. Say there's a dialer company or there's a data company, right? So this founder could go to dialer company and data company and say, look, you guys are probably seeing $1,000 acquisition cost as well. And you can't afford, just like I can't afford. So let's 10 of us get together and spin up a platform, and then we'll just subsidize our CAC. The same customer comes in, we'll sell the customer $1,000 goods, and then individually we'll subsidize CAC, but split the revenue amongst us, right? So I foresee that there's going to be rise of numerous such platforms through partnership. Right now, only large companies like HubSpot or Salesforce or ZoomInfo can build these platforms in house because they have thousands of engineers and product managers to kind of invest. Small endpoint solutions, obviously, they can't build like end to end workflows, right? But they can partner with other companies that already have. So I do see rise of like on demand platforms using um, tools. There are some integration tools now. So using those tools, you can like Tray or tools like that. Um, you can put together or integrate multiple of these platforms together. So yeah, that's kind of something that I see happen as the cost of CAC keeps on rising.
Absolutely, it's quite interesting. And talking about moat, we have touched upon it previously in the conversation, but how do founders, especially working in the AI space, think about a moat that's tangible enough, defensible enough in this environment?
That's a really important question for founders, right? Ultimately, you don't start a business if you don't have a moat, or you don't have a at least a theory towards a moat, right? And sometimes the assumptions you make could be wrong. But I believe that every business should continue to work towards a strong moat, right? So I'll talk about the moat that I have seen in AI. But another framework to think about the business is that I find useful is every month I question myself that whatever effort I made to generate, say, $1 million in revenue, next month I should be putting in less effort, or with the same effort I should be generating more revenue, right? So the whole goal of business is to build systems and automation, so it keeps getting better every month. It keeps you keep subsidizing your effort for next month, right? And the way you subsidize the effort is you build systems and automations and insights and best practices that keeps making you better and better, right? In a very systemized way. The problem is most founders, they think the goal of running business is so they make revenue. They sell something to customer and make revenue. And if they make the same revenue with the same effort in month one, month two, month three, they still celebrate. I look at it and say, no, this is a really bad business, because as the business grows, it'll get complex. You'll have to end up spending 3x, 5x more effort, right? The goal is, as the business grows, you have to spend half x, quarter x for the same revenue, right? And that's where you create growth flywheels, right? Now, back to AI. How do you create that? So, first of all, every business should think about how their customers are subsidizing their future business. Customers are not just for revenue, right? So most founders make the mistake thinking customers paid revenue, their role is done. Customers should help you co-create the business, right? Co-create as in, say, marketing help. If customers really believe in you, they could go on LinkedIn and maybe promote you. So founders should figure out how to get the customers to promote, right? Maybe the customers could provide data in addition to revenue, that makes your business, end up having build some data sets. Now, AI ventures, ultimately, the performance of AI really depends on proprietary data and systems that you build around it. We are in the early stages, so all AI seems to be the same. They all seem to perform as good as ChatGPT, but there will be difference in performance, and some will, and we'll begin to see in coming days, months. And I think all AI ventures should strive on putting together some kind of data flywheel. So data contribution networks, where users that are contributing data, non-public data, get some incentive in return. And I think that's training AI around these vertical data sets is going to be the next battlefield.
Absolutely. Yeah, that's again a very solid insight there. That data can actually become your moat, even in the AI world as well, because that proprietary data is not available to every other company. So
Right.
if that's available to you, then that's your moat, right? Quite interesting. So, so you mentioned about how the traditional GTM or the traditional approach to GTM is completely not working anymore, and there is a new approach that needs to be taken. Uh, do tell me about what's your take on that and what's working now.
Yeah. So certainly some parts are working. So for instance, um, if you're a small company and you don't care about your reputation because nobody knows you, um, so you don't mind sending out, say, 100,000 or million emails to your entire market because you just want some revenue. That just destroys the channel for everybody else. That's just bad manners, right? Because now buyers are going to like shut off and never respond to anyone else, not just you, right? So, and we see that happening now. I talk to founders and they're like, okay, I just sent 10,000 email. How does it make a difference? In the world is so big, there are millions of people. Like, how is my 10,000 destroying? But turns out the cost of data and cost of automation, it has gone down so tremendously. So 20 years ago, only DNB was selling data at like 300, $350,000. That was the entry price to even use data, right? Automation, they were like, that was another 150, 200,000. So even just to start sending those emails, it would cost half a million. So IBM was doing it, right? And some large company, but not every startup. Today, a company gets funded, say $50 million, the CEO gets 100 emails, because now at $50, every startup is sending some triggered email, and they're thinking this is signal based and this is healthy. And but I've had these CEOs say, like, what do I do with these hundreds of? They find a way to send it all to junk, right? I feel like what was good, what worked, and perfectly rational. In fact, there's a good playbooks people are sharing amongst themselves. But if everybody starts using it, it becomes a terrible playbook. So I have the vantage point to look at what was good. In fact, I helped create this space, right? And I feel responsible. I didn't think far enough. It seemed to help everyone. And now, if everyone uses it, it's like totally destroyed the market, right? Now, there are some pockets of hope that's working. So, for instance, Clay can enable you to run say, micro campaign. Instead of sending 10,000 emails, you could send 10 at a time with lots of signals and lots of triggers and AI, and those are healthy. They still perform well, and I'm a big proponent of those emails. So there are many such pockets and workflows that still work. I do a lot of LinkedIn prospecting. That works for me. Happy to double click on that. But what I am doing is more buyer led. So I feel like, and I don't foresee that the market will entirely shift from sales led to buyer led. I'm just trying to have, say, 5% of these transactions to move to buyer led. So buyer-led and agent to agent. So let me explain. There are 2 points of inefficiency I see in current go-to-market. One is 50% of go-to-market costs goes into lead acquisition or demand gen, right? And then there's a lot of inefficiency because you send 10,000 email, only 10 people to find 10 people that are in market to buy. You do 100 calls across like 4 weeks, only to find 4 or 5 that are interested, right? So, and everybody stays busy doing these calls, SDR teams and AEs and so on. But then their cost structures are built around to have only like 1%, 2% conversion, and like there's a lot of wastage in the system. So one part of our solution is everybody that logs into our platform, we give them an agent, a seller and a buyer and so on, right? And then when sellers or buyers, because buyers have the same problem, number of vendors are growing. Earlier they could easily buy from like 20 vendors. Now when there are 200, how are they going to buy, right? So the buyer cost goes up. So we are having agents talk to each other. So seller agent and buyer agent. So agents go to seller agent and then they have the seller agent pitch to them, and these agents talk to each other. And when there's a match, then they set up calls between humans. So now, instead of the seller doing 40 calls to find those one or two that are really interested, now those one or two calls are showing up on the calendar and skipping the other 39, right? And these are like already start with 30% likelihood of closing, because buyers are looking at only like these matches are happening with only the top 3, right? So that is one part of our solution. The other part is so that is the end deliverable, right? Sales love us because of the high engaged leads, right? But then how do you get to that? So that's the other part. I think buyers, they need answers to some of their question that's burning for them, and they need a personalized, say, grid, not a Gartner grid or a G2 grid that is the same CRM grid for the whole industry. But every SMBs behave differently than mid market. Manufacturing behaves different than IT and services, and there's so much complexity in the world, right? But then there are all these one size fit all grids. So what we do is we let the buyers decide, ask certain qualifying questions, and we look at the data out there, send out an agent that's continually looking for solutions to problems. Um, and then during that buyer journey, we allow vendors and agencies and consultants to participate and solve the problem for the buyer. And while they are solving, the buyer also hires them sometimes, right? So this becomes again an intent, high intent lead gen method. So the future of go to market, I think, is where buyers start the process and sellers help the buyer buy better, right? And then in the process, they end up selling their product. And that is just the healthier way. No 10,000 emails would be sent, and still they will all get the same 3 or 4 um, high intent leads in their calendar. Yeah, let me take a pause. That's a lot to absorb.
Yeah. No, that's quite interesting how agents are engaging with agents and discussing whether they should buy or not, and then setting up calls of humans that, okay, I finalize these ones and you can look at them now. Quite interesting where we are heading, right? Great. So something that you mentioned on your LinkedIn once is that you had to switch voice vendors 3 times already, right? How should companies structure their tech stack for this constant change?
Yeah, so AI is undergoing so much of change and churn. These vendors themselves are building new models and changing business policies, right? And they're some are raising more money than others, and so the entire market is, for lack of better word, if I can say, unstable. Um, so um, we did run into uh, a large vendor that over time we wanted to do voice cloning. They wanted enterprise license. They wanted us to They changed their policy where they wanted us to pay hundreds of thousands of dollars for that feature, which we thought would be included with a low end pricing. So it then we switched. Then we went to a smaller vendor that were very open to working with us. But then this smaller vendor had performance issues because there was a tremendous lag from time to time. So there were infrastructure issues. So yeah, we are and then I moved to like another vendor and had some more issues. So um, my learning is that things are changing so fast. Um, it's really important to stay on top because we could have wasted each time we switched. It took us a week, 2 week to change API and integrate to new vendors. Um, but if we didn't peel off quickly, it would be even worse. We would have wasted even more time. And now we have built the code in a way that it will be really easy for us to switch to new vendor. In the first time, we thought we are never going to make this switch, right? Second, third time, now we are totally prepared. We are even anticipating, say, vendor switch if need be, right? So I think all founders should think about that. Switching LLMs or switching other vendors and providers is and once you find a good one, it's good to just stick by it. But there is going to be some uncertainty and uh, performance issues in AI in the coming until everything stabilizes.
Right, surely. Uh, you mentioned how you use LinkedIn for prospecting, right? And I see you're very active on the platform, right? So can you give us an insight into how you use the platform and use it to generate interest into uh, the product that you're building, and also gain traction from there?
Yeah, yeah. I'm kind of early stage in what I'm building, so I'm not exactly selling on LinkedIn, but I've done that in the past, say with RB2B, when I was in more in a sales mode. But the way so my playbook is um, I have chosen a certain ICP and content pillars that work for my ICP and my audience, which is around sales, marketing, founder, entrepreneurship, and so on. And then I write content uh, for those ICP, right? And the business I'm working on. And then when people engage with that content, I have some kind of automation in the backend where I scrub the people that engaged with the people I want to talk to. And then when I want meetings, I just have that configure that automation to drop my calendar link with a one line message. And I find I have like 50% conversion. And these meetings come inbound. I don't even have to send emails, right? So because the key is I have to do this within a few hours of my post because people when they engage with the post, they've already gotten some value. And if I have an ask right after they got value, they generally want to reciprocate versus if it's a cold email. So I'm using this this hello effect or this micro celebrity effect that lasts for a few hours with around content, right? And then it goes away and then people forget you. So I'm trying to leverage that into having an ask for prospecting.
Absolutely, yeah. That's a very interesting approach. It seems you're heavily bent on optimizing the high signal buyer intent, or
Right.
someone who's already engaged with you in some way. Even the platform is built around that the buyer interest is there. You just have to match them with the right product that is right for their needs, right? So
Right.
that's amazing. Got it. So let's talk about the attention economy. Attention seems to be the scarcest resource in B2B. What's actually working to cut through the AI noise? You being an AI product yourself, how do you make sure you stand out and try to make your product stand out and be heard in the noise that's all around you?
Yeah, yeah. There's so much of noise, and the noise is increasing that we are reaching a stage where almost being different is more important than being better. So if you're building a new company, I would say try to do everything different if you can, right? And it's going to get increasingly more and more difficult to be different because you build a new product or add a new feature within a week or two, all your competitors will copy it because it's so easy to like build those interfaces, right? So um, I think go to market, thought leadership, community, these things offer opportunities that are still untapped of being different. Product will increasingly not be the opportunity to be different. Now, some products that are hard to replicate and but they're also expensive and far in between. Like you can't just copy OpenAI, right? So, but a lot of the product that are uh, more like others, you'll find that they'll still succeed if the founders are creating a community, creating trust, credibility through thought leadership or content like this. Um, I think people want to buy from others they can trust when the market gets noisy.
Absolutely, that's hitting the nail on the head. I think building trust, credibility, and uh, even a brand, if you can, in that noisy market, so
Sure.
many people competing for the attention. I think if you manage to build a brand around the product, then that can really help in the buyer decision and get more traction for you, right?
Absolutely.
Let's talk about the future of B2B, right? 5 years out, how do you think the buyer seller relationship is going to look like? We are already seeing agent to agent interaction. So, what's it going to look like in five
Yeah,
years?
yeah. I think about the future a lot, given what I'm building. I think the future of B2B is B2C. And increasingly, we'll see more. So, cost of products will keep going down. Um, they'll they'll be more agent driven, more outcome driven. Um, if you think about, so there's going to be less sales driven because when you're selling for $1 million or $100,000, you have sales led and it still pays for. But if you're selling for more products for hundreds of dollars, then it's more marketing led or more PLG, more community driven or alternative go to market models, right? I do foresee sales teams becoming much shorter than they are today, replaced by agents or uh, marketing. I think I foresee marketing becoming bigger, more investments going into brand building uh, and into other marketing initiatives. Um, I do, I do. I think AI and agents will play a big role, but in a much different way than they do today. Because today, what people are trying is either is just providing more insights incrementally, or they're trying to replace like a salesperson. But then it is replacing a salesperson, but doing the same inefficient things they were doing. The salesperson was doing, and that's why the AI SDR companies are not working as well. I think once the dust settles, AI is going to be used very differently. It'll be used like any other productivity tool. You're just going to have less number of reps. Their quotas will double, and they'll need AI to like do wipe selling or just to make themselves superhuman, right? So rather than uh, have AI to replace them, so they'll know a lot more about the buyers, a lot more about the context, their own company, and know how to what to say when, how to accelerate deals. And a lot of the inefficiencies that we have in go to market today, which is where half the employees are spending time, those inefficiencies will just go away. And I hope some of that goes away because of buyer-led go-to-market that we are building.
Yeah, absolutely. And moving to my last question before we try to wrap this up, walk us through Zeer AI's digital clone platform. What B2B use cases are you seeing the most traction with?
Yeah. So this this agent platform that we built, that's a small piece of the overall picture. It's going to take us another few weeks or a couple of months to build the entire platform. So that's why we have released just one part of the platform. But look at it this way: we don't talk about the bigger platform. So a lot of the what I've shared is not exactly what I'm building because I feel like it'll confuse people. So it's difficult for me to just talk about one component of it. But look at it this way, right? So there are a lot of chatbots on the websites. You can go and it can and answer to your questions. But the role of those chatbots are really to drive you towards a meeting with a SDR or a salesperson, right? Or if you're in a support side, then to uh, resolve any tickets. There are no chatbots that are built for buyers that will that's designed to help the buyers, but it's sitting on the vendor website because that's where buyers do their research, right? But it's designed to help the buyer through the journey. And even if it means that the buyer ends up not buying with that vendor, but buying with a competitor because that's a better fit, right? No chatbot and no AI is designed. All AI is designed to push the vendor solution to the buyer, whether it's a best fit or not, right? So we are building. This is kind of the key differentiation. We call it buyer concierge. So some vendors will take our solution, put it on the website, and really help the buyer. And in the process, they generate a lot of trust and credibility with the buyer, right? And our research is showing that buyers appreciate vendors that help them with the buying process. They have the first right of refusal to the revenue. Otherwise, the buyers don't even want to involve the sellers unless the sellers are cooperative to their buying process, right? So we are building tool, and this agent platform is one of the first tools that will sit on vendor website, but it's been designed to help the buyer, and it will allow the buyers to do like a micro RFP or ask some qualifying questions with the vendors. And if the vendor cannot answer, like if the agent cannot answer, it'll escalate it and have humans find answers. And so there are small tools that are built into this platform to help the buyers buy better.
Absolutely. Yeah, that's quite interesting what you're building there. All right. So, with that, we come to the end of this conversation. Thank you for making time for this, Santosh. It's been an incredible conversation. Loved all the insights. They were very unique, very profound. A bunch of those. Uh, Thanks for coming on, and I wish you happy building.
Thanks, Prashant, and I enjoyed this call.
Likewise. Thank you.